Social Security is one of the most complex and confusing federal programs. With over 2,700 rules, it's no wonder that we're confused about when and how to start collecting and who to turn to for help. Welcome to Social Security Answers from the Experts, hosted by Martha Shedden. In this podcast series, Martha meets with professionals to provide you with the answers to questions about this most important financial decision. And now, here's your host, President and co-founder of the National Association of Registered Social Security Analysts, Martha Shedden.
Hello, everyone, and welcome to another great show. I am your host, Martha Shedden, and today I have the pleasure of welcoming Paul Tyler to the podcast. In addition to serving as Chief Marketing Officer at Narssa Financial Group, Paul hosts That Annuity Show, a podcast that covers annuities as well as financial planning and retirement topics. At Narssa, he is currently building a retirement brand, re-engaging independent agents, building a direct-to-consumer channel, and running an InsurTech incubator. Paul, thank you so much for joining me today.
Oh, thank you, Martha. It's a pleasure.
It's great to have you here. I see you have a degree in history and a law degree from Cornell Law School. Tell us how you got from there to here. I love to hear people's stories.
Sure. My grandmother actually sold insurance a very, very long time ago, but there was no, funny enough, no direct connection between what I'm doing. The opportunity to go a great institution, Princeton University out in New Jersey a long, long time ago, and majored in history, and then thought, I wanted to go into business, but I thought, maybe, and parents also thought it was a great idea to go to law school and get a real job. But, it was interesting. I really love business law. And, as it so happens, it was actually easier for me to find a job in business at that juncture than it was in law. I'm actually an inactive member of the State Bar of California.
Oh, you are?
I am, but I really sort of got my career launched in management consulting, doing work in technology for some telecom companies, and then also insurance, group insurance, and so. One thing led to another. I think when I started consulting for one of the large insurance companies, Martha, I didn't know the difference between an actuary and an underwriter. I actually mistakenly called an actuary an underwriter once. I was put in my place.
That's
pretty swiftly. I ended up working for, MetLife for a number of years in a bunch of different positions. You kind of name it in the insurance business, I worked in it, which probably in about 2005 looked like kind of a dog-eared resume, but fast forward to a digital age, it's really helped to understand, really have sort of soup to nuts view of how the machine works, because as consumer expectations of service have gone up, agents' expectations have gone up, to create an experience that feels somewhat, if not always, coherent. You need to understand, if I turn this switch off here, what happens in the next room?
Yeah, it's complicated.
Yes.
Well, and I've interviewed others who went through law school too, and then went into different things. And actually, my dad was an attorney and a Superior Court judge, and it's just a wonderful background for so many different.
Oh, it absolutely is. Well, yeah, and I think especially in business like ours, which you think at the end of the day, what are we really selling? It's if you really look at it technically, what we're selling is a contract, but then a contract kind of quickly turns into computer code. Or is it the computer code to find the contract? It's technology and law and regulation all kind of converge in this business, in a broad sense.
Yeah. So when you say you're building a retirement brand, what does that mean for independent agents and consumers? What's encompassed in that service through your company?
Yeah, sure. Well, our company, I tell people our company is a 180-year-old startup, and that usually gets a few laughs. NASA Financial Group is only 6 years old at this point. I knew the two founders before I joined, and they raised money to acquire Phoenix Life Insurance Company, a couple other companies in 2016 and 2017. And so really, I had the kind of privilege to build a brand from scratch, obviously with some
Yeah.
other people with some other people having a fairly heavy influence on the direction. But so we've really tried to build a brand that, stands for Bill's, takes the best things from the past. I mean, Phoenix Life Insurance Company insured Abraham Lincoln and actually paid the claim when he was unfortunately assassinated.
Oh my goodness.
Yeah, so the companies we've acquired have an incredibly rich history of serving policyholders, serving agents, serving the community. And so, how do you take the best of the old and the best of the new, and build something that people have, agents, consumers, rating agencies, investors have confidence in, for the next 100 years. So it's been fun. It's been a fun journey.
Yeah. Annuities still seem to be misunderstood. They elicit a very strong positive or negative reaction. So why is that?
I would say, what do they say about squirrels? It's the difference between a squirrel and a rat. A squirrel has a better PR person. I think somewhere along the line, the insurance companies didn't hire the right person. Because honestly, Martha, people will split hairs with me, but everybody owns an annuity. It's called Social Security.
Exactly. I was just going to say that.
Yeah, this is an annuity, right?
You're paying into it. You are
pay in, and you eventually, at a certain point, you can turn it on. At a certain age, it's probably a smart thing to turn on. And then at 72, boy, you've got to have started taking money out of these things, or the IRS is going to come after you. So, and by the way, the income lasts as long as you live. That's
the definition.
Yeah, definition of annuity. I think there's a lot of confusion because I would attribute it, I'd be interested in your perspective, to just the nature of the baby boom generation, right? You think of how much impact this one generation has had on the economy, on investments, on housing, now in healthcare, senior healthcare. I think we saw the same sort of phenomenon where, 20, 30 years, I mean, if you looked at where people were investing their money, I'd argue it was all in that accumulation phase. So everything, if you put money to an institution, it felt like it should be an investment. And really, annuities just aren't investments, they're insurance. And this is a hard concept to communicate with people. They say, well, what's the ROI? They're expensive. What's the return on this thing? Well, Martha, what I tell them is, what was your ROI in your homeowners insurance last year? Oh, it was negative. That's a good thing. Boy, I bet if your house had burned down and it was replaced, you would have had a great deal that year. Mm-hmm. And really, annuities at their heart, I kind of describe them as protection. They're all about protecting your assets from these crazy market declines. Now, right. Oh, great. But Paul, the market's gone up and up and up and up, and I only got credited this much percent. Well, Martha, eventually you'll see a bump. But I didn't. Yeah. Oh, welcome to 2022. Yeah. Here it is. And if you retired last year, this was not a good thing. If you had all your money in a 401k.
Yeah, you don't want to be taking it out now.
No.
So I wonder if it's just the way. I mean, I work with a reverse mortgage specialist too.
Okay.
And same thing. They're now federally insured. They're very protected. They're a wonderful retirement tool that you should consider and be educated about. And that's how I think annuities are. They used to be, well, not that they used to be bad, but you should just know what you're getting into and know the details and what it's costing you. But that comfort of having that guaranteed check for the rest of your life is invaluable.
Well, it is. And I think, how do some of these, products like annuities get bad names? Unfortunately, anytime you're working with money, you end up attracting a few bad people. Unfortunately, if it's, managing a cash register, so now everybody's, all the payments are touchless, or cashless, but there's a reason there's a camera on the till. And I think, a challenge in our business has been, all it takes is one or two agents who are, misrepresent the products, take advantage of seniors. As you know, it's elder abuse is a big issue in this country. So I think just the nature of the business can attract enough people that you end up with a tarnished reputation for all the people who are doing good things in that. Commissions, it's interesting. I've had a lot of discussion about, I'm sure you're involved as people have passion debates about which commission structure is good or bad. I think my opinion is it all depends what the client needs are and what the services are that are promoted. But I've usually seen commissions on products in direct relation to how complicated the sale is. So if you looked at some of the earlier fixed index annuities, say in the early 2000s, the commission structure was relatively high for the product. And I think a lot of people looked at the commissions and said, oh my gosh, they're paying how much to set up an annuity like this? Well, it probably took a lot of explanation for those clients in 2002 to explain how what a fixed index annuity worked versus today. You've got a lot of education, you've got wonderful websites. It's a less complicated sale and the commissions tend to go down. I've seen this happen in, mutual funds. You remember, mutual funds, I think used to have 7%, 8% loads at one point. Now what are they, next to nothing. Variable annuities, same thing, went down. We're seeing the same thing in fixed index annuities. You mentioned home reverse mortgages. That was one of the first knocks on the reverse mortgages was the origination fees were so high. Well, they've come down. People like you on the show are helping educate people about it, and it's not so complicated when you show up at somebody's house or explain a product. So I think people, especially over the next 5 or 10 years, are going to look at annuities a lot differently than they have in the past.
Yeah, you're right. It is the biggest component is the education of it. It's like Social Security. Once I start explaining in layman's terms what's at stake and what applies to you personally, you get it. And then you understand why you need help making that decision. So I see that you are a member of the American Portfolios Advisory Board.
Yes, I am.
We have a number of American Portfolio members who've become analysts, and because they see the need for Social Security expertise and planning for retirement. How much of an emphasis do you see most of your independent advisors placing on Social Security education and making that smart claiming decision?
Oh, I think it's enormous. I think it's an enormous role that these advisors play. Now, of course, as you know, every advisor has a different business model and has a slightly different approach to how they're addressing it. American Portfolios is a great company. I think it's great. Some of your advisors are the advisors are working with you. A great firm. For those of people who don't know, American Portfolios is out of Holbrook, New York, and Long Island, but Lon Dauber, who's the CEO, has just done and his team has just done a great job doing the right thing, for the clients, the right thing for the agents over an extended period of time. Haven't grown very quickly. Haven't, let me describe it. They've been very careful in who they recruit and how they recruit.
I see. Good.
And it's a very planning focused organization.
They are. Yes.
Yeah. And, Lon and his team have been very forward-looking and bringing in, companies with interesting, platforms that help people, help advisors navigate these situations. Because as you know, it's complicated to walk somebody through their planning to when they're going to take Social Security, how they're going to do this. How do you take your RMDs? How do you, the optimization is an enormously complex task.
It is. It's the more. When I first started working with Social Security, I didn't understand the full extent of how that is tied in with all those other decisions. And it goes on and on when you consider taxation of different account types and withdrawals. And
right. Oh, I have to pay my health care out of Social Security. Yes. Oh,
my
by
Social
the way,
Security is taxed.
I'm taxed on Social Security. So where are your other sources of income? And
Yeah.
Martha, I'm not even going to pretend to be an expert. I know enough to say you need to talk to somebody.
Yeah, that's a good thing to know, though.
Yeah, as you know, there's some important dates, 59 and a half, right?
You can take out, yeah, that's
Take
right.
out money from your qualified accounts without the IRS penalty. Okay, do I take it then? Oh, 62. Oh, great. You can start taking your Social Security. Well, Paul, maybe, but I don't know how long, when are you going to die and how long are you going to stay dead? I don't know. So maybe I should have a bridge strategy, right? Till my
That's right.
full retirement age. And then this interesting, extension of the RMD rules, right? With, age with the Secure Act. I mean, I don't know what you think. People looked at it and said, I don't know, 2 years is going to make a difference. I would say if you're on that cusp right now, this year, it was a good thing to extend it a couple of years.
Yeah, and I hear it might even, they're considering going up quite a bit farther, maybe even 75. So.
Oh, I hope. If I could wave a wand and change one thing of Social Security, be getting rid of that RMD rule, because I think that just my personal feeling is this is just one other way that you end up taxing people who did the right thing. They went to work every day, they saved money, and okay,
Yeah.
that's it.
Yeah. So I have a question for you because I consider my kitty's helping me talk with you. Social Security being an annuity. So I want to talk about if we were to evaluate an average person's contribution to Social Security, that's the 6.2%, up to the current taxable max, which is 147,000, and then the employer is contributing that. What would be a good return on those funds? I guess we need to factor in the additional 6.2. So if you're thinking from the employer, so if you're thinking 12.4 is being put in from their payroll every year, what kind of an annuity would that give you? Because I know how much some people get in Social Security over their lifetimes.
Right.
Do you see what I'm?
Yeah, if you were to compare Social Security to a typical annuity, is that what you're
Kind of, yeah.
asking? That's a really good question. And
I mean, okay, let me ask it this way. What would I need to pay for an annuity now to receive a total lifetime amount of like $500,000 or $600,000?
I typically think of it in terms of monthly income. What would that translate to monthly income?
So, how about 3,000 a month?
Okay, so 3,000 a month.
36,000 a year.
Yeah, so 30,000. Let's see. Let me think if I can do that. Again, almost all these questions.
Yeah, no,
it depends. So for annuities, we actually have a product that is. Let me describe sort of the classes of annuities today, right?
Okay.
I would say the ones that most people are buying are annuities that either start paying income almost immediately. So we actually, our company has a product geared specifically to people who are trying to bridge to Social Security. So we actually end up doing a lot of work in the federal space. So federal employees can, I think, retire at 58, if I'm 57 or 58. Well, that's great. You do that, but then you can't. Great. When do you actually want to start taking your Social Security? And so we have a product that if you put the money in and you turn it on and sort of take this lifetime income benefit, it's relatively high. So if you were taking out, say, and I'm going to do this in rough approximation, if you had $100,000, put it into one of these, you're 62, let's say 60, turn it on. That $100,000 may turn into maybe a $6,000 a year payout. Okay.
6,000 a year.
6,000 a year. Now to get your 30,000, let's just multiply that 100 times. So it's about 500,000. Okay. To take it now at 62. Now, if you say, Paul, but I'm going to give you the money and I'm going to wait 10 years to turn it on, right? Because people will say, look, I want to take the money out of my 401k, put it here.
Okay.
I want to take a chunk of it and put it here to keep it safe. If you wait 10 years, kind of like Social Security, you'll get more. So that 6,000 may turn into 8 or 9.
Okay.
Okay. And then some are even longer periods, like 15%, right?
if you set it up
15 years.
when you're younger and you're not taking it for.
Yeah, younger, meaning you're probably in your late 50s. This is not a product you'd want to put somebody in their 30s in, because you're going to get some market, accumulation. All these products have different formulas in terms of what the accumulation factor is.
Exactly.
Some are a little more, some have higher guarantee, these products are like, water beds. Listen, if I push down here, it's going to go up here. So if I may give you higher guarantees, but the money's not going to, your accumulation account's not going to grow, and you're not going to have potentially higher growth later. Oh, I'm going to allow your account to have a higher growth potential. Guess what? Your guaranteed payments are going to be lower. So this could range anywhere from, $100,000 could range from like $6,000 for your lifetime, all the way up until maybe 10. I've seen illustrations as high as 10 or 11. Now the good news for retirees, and I think if there's one bright spot in inflation and interest rates, the fact that interest rates are going up, it allows the industry as a whole to go out and actually offer higher accumulation rates on these products.
Okay, that's a good thing.
Yeah. So, you're thinking about this over the next year. Good news is the products may have higher guarantees if you want the guarantees. So I like guaranteed.
Yeah. So I would say for those of us who have been paying into Social Security since we were in our 20s or earlier, and that amount is actually, you can see it on your statement, what you and the employer put in is relatively small compared to what we potentially get out for the rest of our lives.
Yeah.
My next question is about InsurTech. What is an InsurTech incubator? I've heard that term now more and more. What is InsurTech?
Yeah. Well, if you remember fintech started, this whole sort of fintech, I don't know what you call it, movement, sort of evolution of finance started, I would say probably around 2009, 2010, when, internet started everybody suddenly has a website, everybody has a phone, cloud services like Amazon, Azure, Google Cloud start to come up, enable a lot of startups to do some really interesting things with payments, right?
Yeah.
Think of Zelle, think of, Venmo is probably a little earlier. There's been a whole revolution on the payments, side of payments. Like why should it cost me 3% of every transaction to be sent to MasterCard or Visa? So I think if you look at a lot of the payments people are accustomed to right now, that came out of sort of the whole fintech movement that was really taking advantage of new technology, new cloud, open source software, new buyer behavior, mobile phones. That was just payments. Guess what? The insurance industry is ripe for innovation at the same time. We have these massively old legacy systems. We can barely, we take ACHs, that's our payment structure. And I think starting, sort of the 2011, 2012, a lot of people who were involved in fintech moved over to the insurance space, the insurance companies, and a lot of people said, this is probably the time we should start looking and seeing how can we change the products we offer, the services that we provide to people, and take them to the next step, make it cheaper, faster, quicker for people to get coverage. So, lots happened. I think the property and casualty side saw probably the quickest amount of change. If you go to buy car insurance, you'll be a beneficiary. You basically give your number now and your car, and suddenly all your information is there. It's very easy to apply for auto insurance. Take a picture on your phone, file a claim. So life insurance, has sort of changed next. Annuities and the whole retirement space is following suit. So in Hartford, we 3.5 years ago, we launched an incubator. We had a beautiful building in the middle of Hartford, a lot of empty space. We renovated the building, and at the time, Hartford still has a very big insurance cluster there. We had some very far-sighted politicians and regulators who said, let's kind of try to reinvent the community around innovation and technology and risk management. So just before COVID, we had 5 incubators running in downtown Hartford, and we've been effectively almost sort of a a catcher of some of the bigger startups the better startups that have chances, that really want to invest time in building relationships in Hartford. Now, during pandemic and post-pandemic, we focused all our energy in the retirement space. So we actually have an event. I'm not sure the timing of when this happens, but on the 22nd of June, we have a Retire Tech event. So 11 to 6, we have 4 or 5 panel discussions. We've got carriers, startups, service providers, technology vendors, some real interesting, thinkers in the space, all talking about these issues, Martha. How do we make it easier for people, easier to find people who need help, easier to serve them? Some of the platforms I'm sure that you're working with and your people are represented there.
So that's an in-person conference, Paul?
In person. We also have a virtual option. So if you're interested, I'd love to have you, participate in any of those sessions.
Yeah, that's okay. I understand now. It's just that whole technology as it affects each segment of our society is.
It does. And we'll have, Cheryl O'Connor from Income Conductor. I'm not sure if you know Cheryl. She'll be there. We have some representatives from LifeYield. These are all software platforms focused on taking Social Security and other retirement assets and sort of building online plans to help people optimize their income. We have David Dooley coming up, who worked with one of our other competitors to build a rider on a product that will actually kick in if Social Security rules changes in the policy take money away from your Social Security payments. It's kind of interesting. I've never seen a rider guarantee a public policy before.
That's interesting. Well, because that has the potential of coming around. Hopefully it won't, but
hopefully it won't. I mean, what do you think? Needs-based testing, is that in the future?
What I'm seeing mostly is the raise in the cap on earnings.
Okay.
The reason that they're at 147,000, that has not risen over the years. It goes up every year, but it has not gone up in relationship to wages and earnings. So.
Yeah. We've seen the changes, right? This all goes back, I think, to 1985, but the full retirement age has shifted. This is not a static program.
No, it's not. No, those. I mean, the 1983 amendments were
83.
That's what we're using up the surplus of those funds that came into the trust fund, thanks to those amendments that were set up, and that extended the program as long, from 83. So they did some wise planning back then, and I hope that's going to happen again soon. Speaking of that, if you had the power to decide how to make the Social Security program last into the indefinite future, what changes would you make given what you understand about it?
I mean, people are very worried about what will happen. When is the date?
It's now estimated for about 2035.
2035. Yeah, it kind of seems to
34, 33.
Yeah. It kind of goes in here. I don't think this will be like I don't think this will be a Y2K event, for Social Security.
I personally don't think we're going to let that happen. And at that time, it's just a matter of the surplus has run out. And so it goes back to pay as you go.
Right.
So, meaning the number of workers are paying for the number of beneficiaries, and there's not enough workers. So that's about a 20% cut. But I can't imagine anyone in Congress allowing, that's just not going to happen. There's more movement on it and more proposals. And there's such huge support for Social Security. There's so many parts of it that can be changed to make it, help it last. So.
Right. I would not do well as a politician, because I think it's probably, to make this thing, last a number of years, you probably have to extend the full retirement age, right? Which, I could see I think for me, it's 68 or 69.
67.
67,
anyone
right.
Born 1960 and after, their full retirement age is 67.
See, you're helping me. This is great. This is great. So 67, right? I could see, 70 being the new 67 easily. Push that out. I could see means testing, coming in. I could see taxes going up. I could see taxes going up on money coming out. I could see money coming in. I don't think it'll go away, but I think you've got to take the benefits down. And I think this is a problem that a lot of municipalities are going to face very, very soon. It was easy to make promises to workers 20, 30 years ago. Yes, about what they're going to deliver in the future, but it's just not going to be sustainable. Somebody's going to have to make some hard decisions.
Yeah.
I'm just not sure that in our current political system that anybody's going to want to address it.
I know we're in a really bad situation right now, but I'm hopeful. I'm an optimist, and a program that's been around for 87 years has something going for it. There's just such huge support for it. So
it's critical. Do we find funds from other, parts of the budget, defense budget? Well, up until January, I might've been in favor of it, or February, but
it's always been based though on the workers' earnings. And I'm strongly in favor of not messing with that fact about it. It's our work and our contributions into that account, that trust, what it is. So I should be wrapping this up here, but it's really fun to talk to you. Based on your experience and knowledge, what do you think are the top 2 or 3 most important takeaways for people approaching retirement, whether that has to do with something you work with, Social Security, just retirement planning in general?
Yeah, well, very self-centeredly, I think it's important that people need to start taking risk off the table as they approach retirement age. And I do think that's the role. There are few products or approaches that work better than annuities, because at the end of the day, what carriers can do is share mortality credits, meaning somebody take any group of population. Some people are going to live longer than others, and the power of pooling that mortality risk is substantial. And I think don't take your entire nest egg and put it into an annuities. Put a little bit. Start putting a little bit as you get closer to retirement, just to take the market risk out of the equation. I think that's kind of the biggest message, Martha, I try to bring people. I also think you've got to approach this stuff holistically. So, what are the big issues? Your Social Security, timing. When am I going to take it? When am I not? What am I going to do with my house? You mentioned reverse mortgages. That's, probably the second biggest asset everybody has.
Yeah.
What are you going to do with your home? If you've got a lot of equity tied up there, option one, which most people take, is, well, sell the big house, buy the smaller one where I cut my taxes, by moving someplace. But there are also some other interesting options. You mentioned home equity loans. I think that's a real interesting opportunity where you can maybe live in place longer. Healthcare. How are you going to pay for healthcare afterwards? People don't realize they have to pay for healthcare, and even when they're paying for it, there's some very complicated decisions at 65 when you have to say, am I going to go with Medicare supplement, or am I going to go to Med Advantage? And that has impact on how you're going to live and where you will be. So it's not this is a puzzle. Oh yeah, and by the way, then there's annuities. Annuities are in there; they help, but you got to have a bigger, broader plan. And I think that would be my big recommendation to people: is start thinking now. The sooner you think about it and start working through it, the easier it will be, and you won't be feel like you're running off a cliff.
Right. Find someone who can help you and get that peace of mind, which I see when I help people with their Social Security, they relax when they know what to get, so, well, great. Where can people go to learn more about you and your company?
Sure. LinkedIn is great. It's, Paul D. Tyler on LinkedIn. Our company, NASA Financial Group, is nfg.com.
Oh, that's easy.
Yeah, nfg.com. So we got a good URL.
That's
we have a lot of education there, and we're happy to help and give advice, or not advice, but keep my attorneys happy, give you information and help connect you with advisors who will, help you navigate some of these complicated issues.
Great. Well, thank you so much. This is valuable information, and I appreciate you sharing with our listeners. And that's it for today. Thank you for listening to our podcast. Please tune in every Wednesday for new episodes where our expert guests share a wide variety of knowledge on retirement-related topics. See you next week.